Okay, S&P 500 here. Let me go over this quickly. I don't want to take too much time on these indices. They are, bottom line is we are on the top of the trading range here. I'm looking at about 2003 or so as the top of the Bollingers for a top interim top in the market. And again, if you look at the internals, we have 1, 2, 3, 4, 5 histogram bars. Look to see what happened here in February. In February, we had 1, 2, 3, 4, 5, little pullback 6, and even though the histograms were easing back, we kept on going higher. So if February is going to be the same pattern symmetry, then we have quite a few weeks left here for this rally to continue after a quick sharp pullback. And I'm going to zoom in here. This is February that we saw here. So we had this reversal candle, okay, similar to here, and then 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the 10 days. So let's see here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're gonna get we're gonna get one of these like reversal candles. I think it's gonna come off by in the next 48 hours. And then we pull back, zigzag around, and we make another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we probably got another 10 more days, another 2 weeks of this rally to continue before we do this type of movement and correct nicely. So that brings us sometime into the first week of September, which kind of makes sense because we have Alibaba coming out, I believe, on the first week of September. We got the Apple event coming out in the first week of September. We have new inflows from pension funds and mutual funds that generally enter the market on the first 5 business days of the month. I've talked about this extensively, and I've been correct on that. And so take all that into account, and then you look at the calendar, which I'm looking at my other screen right now. We have the first 5 business days would be taking out the first Labor Day holiday is 1, 2, 3, 4, 5. The 5th business day is the 8th of September. Wow, 8th of September. Hey, that's also the full moon cycle that I showed earlier on in on real time, right? Not a coincidence. And then 9, 10th, 11th. So possibly sometime between the 8th and the and that week of the 8th of September, we're going to start to ease back, and that's where things go a little bit hairy. So at that point, I believe that we could have a nice. I'm showing this, and I've shown this before, and I've been correct, so I'm going to stick by it. We could have a correction all the way down to 1900 again, and if we fail, we know what the lower parameters are. If we break 1900, we're going to come down and test this 1870, which we never did. Or we basically come down here, test the 1950 levels, which would roughly be about 300 Dow points, and then we move from here. It's very likely that after the correction's over and these indicators reset themselves again, they always reset, right? You got this wave pattern going on. So look at this wave pattern. Look at this, okay? So you're going to see this wave pattern too. So we have a bunch of extra days for these histograms to stay. Given the ferocity of this reversal rally and the amount of money and what Mr. McClellan said, the AD line making new highs. This is not a joke. This is a powerful move. Okay, there's money entering the market. There's a significant amount of money that's still sitting on the sidelines, and they are entering the market. They're not getting anything out of the fixed income markets. The junk bond yields are sky high, very dangerous territory. Stocks, depending on what sectors you're looking at or what companies you're looking at, are still considered to be buyable. It's not like everything has a PE of 90 and going forward. I'm exaggerating, obviously. But the reality of the situation is that money's still entering the market. Key point here, we have to be very selective on the companies that we trade in. The trades have to be small. They have to be quick in some cases. A lot of the smaller mid-cap, small-cap companies have still room to move. They move on their own tune based on their own position within their sectors and what they're doing. And it doesn't have to be that everything has to fall at the same time. So just keep that in mind here. So stock selection is key, and we've been doing a pretty decent job of managing that. So saying all that, this thing will basically go like this, peak here, and then come down again, and the cycle starts again, right? So we'll see what happens. So that takes care of the S&P 500. Let's take a look at the Nasdaq. The Nasdaq is just it's again top of the. Let me take this line out. We can clearly see here. This is a weekly chart. On the weekly, we are up here. So that's saying quite a bit here. Internals are so far fine. So nothing to complain about there. Standard deviation from these 50-day and the 34-day is rising quite rapidly. That means they need to come down, revert back to the mean. That means they have to come down and come close. In simple English, they have to come close to the 50-day and possibly come down and test the 34-day on extreme case. And these lines have to rise to meet the rising prices. Okay, that's just the way it works. Like with the Russell 2000, this chart, seriously should be framed. And I'm not just saying that because I drew it. I mean, honestly, maybe it's the background color, right? I mean, I don't even know where to start to explain this. Okay, it's quite simple actually. Basically, if you put if you and I showed this many times. So let me take a few minutes that we have. I have 3 minutes on this video cast to explain the Russell 2000. All right. So here, I drew this. This is here's the 50-day moving average. Okay, let me get the drawing tool out here. Here's the 50-day moving average. This line, which is this line. We overshot the 50-day moving average. I drew this the other day and it stuck. It went up here, pulled back. There was a gap here to fill, right here. This was a gap. I've shown this in my other chart, so please, go back and study those. It touched the gap right here, and that also falls within this consolidation channel, okay, which I had drawn. It touches the gap, and then it goes bang. So this particular drop that we saw this morning, okay, which was worth a very decent sum of money for fast traders, about 100% on the money actually, and then this reversal, which mind you, I missed. I should have seen this. I saw this on my other charts, my pivot charts, which I can't show everything in one go. But if you close in here, look at this. Okay, this is fast money. So if I do this, if I take this line, so we 21st. Okay, so this was fantastic, and then the reversal candle right here, closing this gap right of the gap. Okay, and then bang. Now what's going to do? People keep on asking me, so what do you think the thing's going to do? So let me see what it can do. Okay, what it can do. So what it can do is we can get to the top of this rising wedge, and that's around 100 about 1170, and that also kind of comes into play with this line here. Again, this is not new, that's something you're seeing. I've shown this quite a few times way back. So what I would say is we could pull back a little bit. We could certainly, let me see here. So we could go like this. We could touch this. I believe this 1170 gets, it gets hit. So we got about 11 points on the Russell 2000 on the IWMs. That's a very decent sum of money. So just keep that in mind. The other scenario is that we come down, we test this consolidation channel on the top, and then we move, and then we move again. Okay, so otherwise what we do is we fall from here and we come down here, which would be 1140. And from 1140, we basically move into this minor gap that needs to be filled, which is the 61.8% fib retracement. That's around 1172. That's the Russell 2000 freaks who love this stuff. You know what I'm talking about. Now let me take all the running out of time here. So again, I'll be putting up my other fixed chart, the static chart. So study those, and you'll see what I'm talking about. And so far, all this is good. The internals, I mean.